keep it lively there. Try. So this is 9th episode. So you're asking us, so 9th episode of our little podcast here. We have Bill Tullis with High Country Insurance. Thank you for joining us today, Bill.
Thanks for having me, Chris.
And it is going to be exciting because you are a insurance wealth of knowledge.
Well, some people might argue that, but
because you've been running. So you're a brokerage.
I'm a broker. That's correct.
So help explain to people what that means versus captive agent.
A captive agent only has one company that they can write with, say an Allstate Farm or State Farm. An independent agent, a broker, has multiple companies that they can quote and write with. So we can get the best value, the best price for, and the best coverage for our insured.
Yeah, and I'm not trying to be. I'll do my best not to be an advertisement for you today, as we work to educate, not sell here. But
there you go.
But yeah, and I've seen that be very valuable as we've talked even on policies from one company might be feeling good about commercial or investments or primary, and another is feeling different about it. And so
that's correct, and it can even be the difference between, say, a home and an auto policy.
Yeah,
a company may not be competitive with the autos, but they are very competitive with the home. So we're able to mix and match companies, a company that might be competitive with the auto, and we'll match that with a home carrier that's competitive. So we get the best deal for them.
Yeah, I love it. And you've been doing insurance in Flagstaff for how long?
20 years now.
20 years.
That's
awesome. That is a long time. We'll dive into all sorts of things. But one of the big questions I had right out the gate is, especially with housing, that's what we're related to, and we've seen housing values go up quite a bit. Do people need to be more proactive in connecting with their insurance companies about making sure they're adequately insured, or is that something they keep up with?
Well, we're not really interested in the market value of the home. We're interested in the reconstruction value of the home. So we run I can't speak for everybody, but we run replacement cost estimators on every home that we run. Yeah. And then we periodically update those so that we can not only, the reconstruction costs have gone through the roof.
Yeah, that's what I was going to say.
And so we've actually gone with the reconstruction cost and then added up to 25% on top of that. Then when you get the extension that comes with the policies at either 50 or 25%, you should have enough to cover the home. We try and make sure you do.
Gotcha. Do you ever see that comes like totally short or no?
No, I have not, because we run those replacement costs. And when we do that, in theory, the company is going to be on the hook for the replacement cost because it's their replacement cost estimator that we run.
Yeah. Okay. Fair enough. And with everything that Flagstaff has had going on, I mean,
we've seen everything
in
the last few years. There's fires, there's floods, we've even had earthquakes. And
really? Have you had some claims on earthquake?
I have not had a claim. I've had people have some damage, but it didn't meet the threshold.
Okay.
So not a big problem out there, but it is there. We've got a volcanic mountain here.
Yeah.
So anyway,
wow. And what now? So questions with it. And sorry, I'm just gonna
ask away
and fire away on so many different fronts. Because with the floods, right? Because that's the tricky part. Is people don't know. Like when we're doing a home loan, we will run a test or we'll look for the. Now I'm forgetting what that's called, Jessica. Flood certificate, right? We'll get the flood certificate to see if it's in a 100-year FEMA floodplain. Because it's in a 100-year FEMA floodplain, we as a lender are going to require flood insurance. If it's not, we don't care. And there are, believe it or not, with our 7,000-foot mountainous town, we do have 100-year floodplains.
We got some serious flood problems.
Yep, through the Rio de Flag and that type of stuff. But the houses that have been flooded recently due to the fires and the erosion on the mountain, those are not in, or haven't been, right? You know better than I would, but those are not in 100-year floodplains.
No.
It's just due to the fire erosion.
It's just the fire and the resulting runoff from those fires. There's been some serious flooding out, say, in Doney Park area.
Yeah.
And then the county has come in and made some changes to the flood system, the runoff system.
Yeah.
And they've actually kind of diverted it to some other areas that didn't have problems before.
Oh, shoot.
So now out towards Slayton Ranch, you've got flood issues where you didn't have those before.
Oh, no.
Oh, yeah.
So what happens, and some of this, I'm sure the folks that are in affected areas are probably much more up to know already with what's going on there with insurance, so forth, but possibly folks considering buying in those areas. How does that sit? Because that's not then FEMA backed. So are they able to go get private flood insurance? Because a traditional policy doesn't cover that, right?
No, you can get FEMA flood insurance out there.
Oh, you can?
You can get a FEMA policy.
Okay.
But there's also private flood insurance. So you got those two different options.
Yeah.
Typically, private flood insurance is a lot less expensive
It is.
than going through FEMA.
Okay.
But FEMA's been around for a long time, and the private flood insurance is relatively new in the last few years. So I'm just now starting to write the private flood insurance because I have confidence in the companies. They've been around for long enough now.
Okay.
But out there in those areas that are not designated flood zones, you really got to also look at the history out there. If I lived in Doney Park, say the upper side of Doney Park towards the mountain, I would probably definitely carry flood insurance for at least a few more years so you get some growth back on the mountain.
Yeah. Because even despite, and I know it's crazy to me that, time moves so quickly that the Schultz fire was like 12 years ago, right?
Yeah, 10, 12 now.
Yeah. And that there was all sorts of issues with the Schultz, and then whether it was growth or also with the county,
right,
building out those culverts and everything, that really didn't seem to be an issue. And then now it's back. So is it more confidence in waiting? And I know you're an insurance agent, not a biologist here necessarily, even though you do spend a lot of time out in nature. Is it really more about the regrowth, or is it more kind of depending on, getting the county out there to really
I think
their job too?
It's a combination. I mean, the county's doing a pretty good job of addressing it. There's some areas that they haven't gotten to. But a lot of it, say out towards Coconino Estates and Cheshire and out that way, are a direct result of that fire. And when you have the growth, the new growth back on the mountain, it'll slow the water down. Right now, there's nothing to slow that water down since the last burn. Yeah. So that area has been affected. There is some pretty good flood control through that area, through the Cheshire and Coconino Estates area. And a lot of those homes are a little bit elevated from the Rio de Flag coming through there.
Okay.
So if I was buying in that area, even if it wasn't required, I would take a look at where my house is in relation to the Rio de Flag. If I was close to the Rio de Flag, I'd be carrying flood insurance.
Yeah. Okay.
Yeah.
And have you seen an increase, like when I'm ignorant to this stuff, so that's why I'm asking the questions, is with everything that we've seen happen in the area, because I do believe, isn't it that insurance companies are looking at geographically basing their risk assessment and changing costs and policies? Like, have we seen overall an increasing costs? Is that due to what we've seen in Flagstaff or other things?
Well, yes, no, maybe. Okay. And the reason I say that is insurance companies have always had designated areas, and they adjust their risk depending on those areas. A lot of that's dependent on protection class. Flagstaff is pretty much a protection class 2, which is one of the lowest protection class, or I guess reverse, highest protection classes you can have.
Okay.
So those are great rates. As you get further away from town, you can go all the way out to a protection class 10, which is the worst. Okay. And the companies are assessing primarily their fire risk. Okay. And a lot of companies won't even write once they get past a particular fire line score. And all the companies are doing that now, their fire line scoring. So depending on where they buy, you might have very limited options on where you can find insurance for them.
Yeah, I know you wrote some things for us with clients that were buying second homes out in Williams and no one else was writing it. Or they were astronomical. It was crazy, some of the costs that they were throwing out there.
Well, they're either excluding it or they're rating it so you can't do it.
Or don't want to do it.
Don't want to do it,
Yeah, gotcha. And so as far as then the system of insurance, they're keeping up with the cost replacement. What are things, though, that people should be, especially as we hit the end of the year and people are, we get so busy, and a lot of people, if they buy the home, they set it, forget it, and don't want to really think about it again. Are there things that people should proactively be doing, whether it's home, auto, or otherwise, that you would suggest?
Well, one of the things I think people should do with their personal property is they should either videotape or take pictures of every room in the house. And it's not so much that it's not that you got to prove that it's covered, because your contents are guaranteed replacements, which means there's no depreciation on the contents. But you're going to forget what you had. In the event of a catastrophic fire, you're going to forget about grandma's knick-knack on the counter, and it's got some value. So I just encourage people to take pictures, store it on the cloud. I used to tell them put it in a file somewhere, but store it in the cloud, and then that way you can go back and remember what you got. So you got a nice itemized list of the things that you lost.
Yeah. Well, and that's a friend of mine who had their house burned down in Country Club. We might know the same person we're talking about, but Big Hunter right there. And they had their house burned down and terrible. And he told me that the worst thing about that situation wasn't necessarily, like there's so many awful things about that, right? It wasn't necessarily the, being displaced from it, going through this stress of rebuilding and everything. But they said just having to replace stuff and remember. And so, again, this guy was a big hunter. So just remembering, I had this little knick-knack or that little knick-knack, and I don't have to go re-buy it, but just having to go to Cabela's and just load up the cart again and all the things that were damaged and have to replace, and remembering what there was replaced was just like so stressful.
You bring up a hunter, but it's guns, it's jewelry. Those are things that should be scheduled, which means they're going to be on the record at not only the item itself, but the value of that item, because guns and jewelry have limited replacement cost on them.
Yeah.
So you got to be careful there. If you got a lot of guns, you probably ought to get them scheduled so that you got them covered in the event of a loss.
So describe that to me, scheduled. I'm not familiar with it.
Well, you would provide, let's say you had 15 guns, and those are worth $15,000.
Sure.
You would provide a list of the type of weapon, the serial number on that weapon, and the value of that weapon, and we would put it on the policy. So we would schedule it on the home policy, so in the event of a loss, that would be covered. Now, jewelry, typically they're going to want an appraisal on that jewelry. Okay. So if you've got an appraisal and you provide that to us, we can schedule that on the policy as well. So any of those high-value items, I know you, Hallows, you probably have some $50,000 artwork in your house.
No, come on. So I don't have artwork. Jessica's laughing over there. I don't have the artwork, but she does know that I became a bit of a gun enthusiast.
You did?
The last little while.
Congratulations.
Yeah. So my next question was, so you get the serial numbers and then you hand it to the ATF?
No. No. And that's the concern. That's the concern, because anytime there's a record anywhere, I'm sure they could get to it if they had to.
Oh, sure.
So some people just don't
want to do that. I was curious on that when we talked hunters and guns.
And then if you're in that position, I would tell people to get themselves a fire rated safe.
Yeah. So, exactly. Fair enough. Too fun.
Like I do.
Yeah, exactly. I love it. And so the video, and then as far as autos go right now with our California student drivers, just watch out behind you. The problem with auto rates has been litigation in the last 10, 15 years. Okay.
It seems like everybody that gets a little fender bender bump from behind now has a permanently disabling neck injury, and they can't work, and they're suing, and there's been so much litigation and the insurance companies, whether it's legit or not, they have to fight it.
Yeah.
And in a lot of cases, if there's a claim filed like that, they'll do a payout, and because it's cheaper to pay it than fight it.
It's economics, yeah.
And it just runs the auto rates through the roof, and that's what we've seen in probably the last 10 years now. They're so volatile. It used to be they would go up and they'd go down a little. Yeah. You don't ever see them going down anymore.
Oh, gosh.
So, yeah. But I would encourage people, if on your autos, you probably ought to shop those rates at least every other year, every third year.
Okay.
Because they will fluctuate a little bit depending on the profitability of the carrier. And so just don't sit there and accept it. You should look at your auto rates.
Okay. Is that something you do for me, or I need to call you?
No, I do that.
Okay. Okay. And then, I had a follow-up question on the autos there. How does that work to where we, and a lot of this casual conversation is like the questions of Chris anyways. I don't know if you saw it too.
This is Chris causing more work for me is what this is. Anyway, go ahead.
As many people are listening to this and are going to give you a call and get everything dialed in. Window stuff. So you have a full comprehensive policy. Correct. We, like everyone else here in Flagstaff, we're on that 17 all the time.
It has to be endorsed for glass coverage.
It's endorsed for glass coverage, yeah.
And I don't write an auto policy with comp and collision without glass.
Yeah.
Because it's not a matter of if you're going to have a windshield, it's when.
Yeah.
And as long as the insurance carriers are providing full glass, you don't not want to have it.
Exactly. It's double negative. Yeah, but it works. Double negative. Well, now, does that make my rates go up at all if I utilize that?
No. Now, it could if you shop, because it is a comprehensive claim. So when you go to another company, it could affect the rates because they're going to evaluate the loss.
Yeah, this guy's
he
windshields all the time.
Yeah, he files windshields all the time. Yeah. But if you stay with the company you're at, most of those are non-chargeable.
Yeah, I drive that FJ Cruiser, and it's got like a vertical windshield.
Oh yeah, it's a
and
target.
It's just like well, not only is it target. Well, it's not super big, but anything that hits it, it's
a target.
It's gonna crack. It's gonna hit. Yeah, it's not gonna like deflect at all.
Oh, my wife just called me. She just got a 2023, and she called me. She says, "I got a crack in the windshield." And I'm like, "You've only had the car out less than a month."
Yeah,
but it happens.
I think with as much as we hit highways here in Flagstaff, and then the temperature changes, that will turn that little thing.
And it's the cinders.
Oh,
you get the cinders. The cinders come up off the road, and they cause a little bit of a nick in the windshield. And I don't know how much you know about glass. I did that in my prior life.
Oh,
I made glass.
Oh, okay, yeah.
But you've got 2 layers of glass with a film in between it on a windshield. Okay. So when you hit that outside one, it's going to cause stress, and then that stress is going to open up a crack.
Yeah. Yeah, no, and that's what's funny is, I grew up in Utah, and they're salt happy. And so it was the funniest thing to me when I moved away for college. And then I saw communities where cars aren't rusted out. Right? It was weird to me because I'm like, why there's these old cars and they're not rusted out. But in Utah, like anything with some age is rusted out. It's because of all the salt. Right. And all the, that causes the oxidation on it. And so then that's funny is like, it's trade-off, right? Here in Flagstaff, we don't have the salt. You don't have to deal with your car rusting out, but
we got the cinders.
We're shipping everything.
There you go.
It's trade-offs there. Gosh. Okay. And is that, trying to think with it. So if they have the comprehensive coverage, it's just get it done whenever you can.
Yeah, I mean, I would encourage them just, to call us and let us know. And then we can walk them through the process that it's a 3-way call with the insurance company. Any claim is anymore. All claims, they used to allow us to file claims for people.
Yeah.
But all claims now, because of some of the fraud and the litigation, all those claims are recorded when they call in.
Okay.
So we set it up where they do a 3-way call between the glass company themselves and the insurance carrier, and it just gets scheduled and done. And it's done at their convenience wherever they want it. It's really a pretty simple process on glass claims.
So in the last round I went through, I work with Safe Light here in town, and just called them direct. I think they called you, and it was just
perfect.
It was
done.
easy.
Yeah.
Yep. Yeah, that was a mess. Did you see that one? You sure see plenty of things.
I see lots of stuff.
And the guy I was talking to, what was it? The Safe Light guy I was talking to. So this was like I was trying to get my boat winterized, and I was going to a guy I hadn't used before, and I got all confused off of. I was on Huntington. Is it Hunt or Huntington? Went to Walmart? Yeah, Huntington.
Right, yeah.
And I got all confused, and I should have turned early. And here I got this boat behind me. And so I go into the total rental parking lot to turn around. This is early morning. I'm trying to rush to work and stuff. And I got some guy pulls out in front of me. I'm like, I just wasn't thinking. I turned too tight, and I hit myself with my own boat.
Oh, yeah. That happens a lot.
Does it happen a lot?
Yeah, it happens a lot.
Like I never heard it. Jessica's just sharing this one. Did I tell you that one, Jessica? Yeah.
It happens a lot with people backing up trailers. Where they'll pinch them and they catch the corner of their truck.
Yeah.
And that happens a lot.
Yeah. Oh, so I don't feel so bad now.
It happened to me.
Oh, now I don't feel half bad. Because as soon as I come back and like my wife sees the windshield all duct taped over and stuff, because she drives that vehicle more that I was towing with, and I was like, don't say anything.
No, wait a minute. You hit your boat in the front of your vehicle?
No. It hit the rear window.
Okay.
So it just hit the rear window.
You said the windshield.
No, oh, sorry. Yeah, no, sorry. The rear window.
That's a good one, Hallows.
I was gonna be like, yeah, the windshield. That would have been an original story.
That would have been tough. That could have made my top 10.
So speaking of which, because I wanted to go there too, without names or disclosure here, give us some of the top, like, and some of these things are painful. So again, we respect that with the people that are impacted. But what are some of the craziest claims you've seen or issues?
Well, I had one that was a total loss on a fire, and the people were. There was a lot of fraudulent activity going on. Oh. Their grandson actually burned their house down. But then they were trying to claim, this is a true story, they were trying to claim they had 800 pounds of gold in the home when it burned to the ground. So they wanted a check for that 800 pounds of gold.
Yeah.
Until the insurance carrier and the adjuster reminded that gold doesn't burn up.
We'd see a pile of it here somewhere.
You'd see a pile of gold, and there's no pile of gold. So that one was a little unique. Probably the worst though. Fatalities in auto accidents. It's really sad. Not only does somebody lose their life, but it becomes a huge litigation issue normally.
Well, and that's just, a terrible situation no one would ever be in, because it's like putting a cost to a life, which you can't do, right?
You can't.
And
it's establishing fault. And even when the insured is not at fault, there's going to be some litigation that's going to try and prove some kind of contributory negligence towards the death of that person, and they're going to try and go after the insurance carrier. It's not always successful, but it's always expensive.
Gotcha. And you were talking to me about, I know we talked about umbrella policies.
Correct. How
many people do you think, I know you and a lot of insurance agents I've spoken with speak very strategically and highly about them. How many people that you insure would you say actually have an umbrella policy as well?
Not near enough. Seriously.
If you had to guess on a percentage.
10% maybe.
Really?
10% maybe.
And help explain that and break that down to people. Because again,
usually it's the people that carry the umbrellas are people that recognize the value of their assets.
Yeah.
They recognize the value of you may have multiple properties, you may have a business, and in those cases, if you don't have an umbrella policy, I think you're really pretty foolish.
Is that so? So is that then something where? I was gonna say, because I often make the analogy with like shopping a mortgage is like going to the dentist. Like it's important and you need to do it, but it's like not fun. And the same thing with insurance, right? People are like, oh, Bill's calling me, you're talking about umbrella policies. Well, doesn't sound super fun.
People hate insurance. I hate it.
Well, and I hate that, so we're in the same boat.
I hate insurance policies.
Yeah.
Because you're paying for something that, like in my case, I maybe have used an insurance policy once or twice in my life.
Yeah. Actually, claim.
And I'm paying all this insurance money. So people, they don't like it.
Yeah.
And so they don't see the value, most people don't see the value of an umbrella policy because they don't think it's going to happen to them.
Yeah.
And if it does, it's nice to have that umbrella policy sitting there. I carry one.
Yeah. So is that only more than for someone that has like more assets, like, not your typical, because probably would you say that probably 50, maybe we'll guess here, 50% of the people that you insure have, the house, 2 cars?
More, probably more than that. Yeah. I'm selective on who I write my insurance with.
Okay.
I don't write the monoline auto, one person, one auto. They don't own anything. They got nothing.
Okay.
I don't write much of that. I have a little bit, but not much.
Sure.
Most of mine are package type policies where I've got their home and their autos and their boat and their life insurance and all that kind of stuff. So I probably have, 75, 80% of my people fall into the category that you were talking about. A lot of people will cover their liability within the policy. And by that I mean they can put $1 million in liability coverage on their home, and they feel that that's adequate to protect them without the umbrella. Same with their autos. They can go up to, and a lot of times they can go up to $1 million combined single limit, and then that's going to cover them for what the umbrella would cover them. So there's a couple different ways to get there.
I mean, is that all those ways created equal, though, in the sense of, so if something, and again, pardon my ignorance on it, but if they do have like an auto issue or something, and then it's a liability concern, and then they have higher liability on the house, does that allow them to go back to that?
No.
Whereas the umbrella would, though, right?
The umbrella would cover that. Sorry about that.
Oh, you're good. Bill's first time on a podcast here. We got to cut him some slack.
It's my wife calling.
Gotcha. We're not set up for Jessica to cue a caller in, so we haven't done that yet. Later,
you can bring Lisa into the conversation. She's
she's
a licensed agent too.
Exactly. No, we always and that was actually my first interaction with you. It's interesting. You and I were talking about just the shifts in business and economy. It just reminds me of people doing business. It's so important just to do business the old school way, right? It's face to face.
That's the way we do it. We don't do a lot of advertising. It's all of our business is referral and word of mouth.
Yep.
And when we first started, we made it a point to go out and meet guys like you and Jessica, who runs the show here.
Yeah, exactly. We have to, and just like Lisa, right? We have to have someone that actually does all the work.
That's it. I don't want to do it. Neither do you. Jessica's not disagreeing over here, is she?
No, she doesn't have a microphone though. She has headphones. Yeah, that's how we like it. She can listen, but she can't talk.
It's a good thing I saw what she mouthed.
Too funny. Where were we on that though? But yeah. So the umbrella though, that's where that comes into play. That does.
It'll cover everything.
Cover everything.
Cover everything. Everything that you do. If you have a personal umbrella, it's going to cover all your personal lines activities, all your personal lines liability.
Yeah.
If you have a business, you're going to need a commercial excess or commercial umbrella to cover the business. So they don't cross.
Okay.
But it'll extend to all your stuff.
Gotcha. Outside of umbrella policies, is there anything else that you say, people just don't utilize this type of strategy or opportunity in insurance enough? Are there any other tools or things out there that you think are underutilized?
Life insurance.
Life insurance, okay.
Yeah, I think especially young people. When you're young, and you're healthy, life insurance is really cheap.
Yeah.
And it's gonna stay with you, depending on the type of life insurance, but it's gonna stay with you for the rest of your life, or 20, 30, whatever your term.
Yeah.
People think they're invincible when they're young,
yep.
and they don't get it. But I tell people, especially if you have small children,
yeah.
If you don't have life insurance and you've got children, you're either foolish, irresponsible, or stupid.
Yeah.
Because you should have it, and it's cheap.
Yeah, it is. I'm trying to remember when I went through it, because it was years ago. And that was one of the valuable things that I realized at the time, too, like you're saying, is that rates are done when you're cheap or when you're healthy and you're young. And, it was really positive to then have the nurse show up, do the blood tests and everything comes back looking good. But knowing, the older that I get and I see people, parents aging and different things, it's like, well, Absolutely. If you have, and it's not going to take till you're 60 for certain things to maybe pop up in your health profile, and things happen to where it can get a lot more expensive.
Absolutely. I mean, the rate of diabetes increasing. And if you get diabetes, you're not getting life insurance. Or you're not getting it at an affordable rate. I mean, it's out there, but it's stupid expensive. But, people should get it when they're young and healthy.
Yeah.
And when you're raising your family, because that's when you need it. When you get to be my age, life insurance...
Kids can't take care of themselves.
Well, the kids are gone. My life insurance right now is for my wife. Because my wife comes from a family that lives till they're like 150.
Exactly.
And so it's for her.
She'll need to find that second husband and just vacation the world. And she needs
will.
A good...
Yeah. I'm going to fund somebody else's lifestyle.
I always make fun of that with my wife, and she gets a big laugh at. Well, no, she does not laugh at it. Actually, I try and laugh about that stuff, but she has a problem with addressing morbidity.
Really?
And yeah. And so I make jokes. Have you ever seen, this is an old,
Nobody's getting
show.
out of this alive, Chris.
That's what I try and tell her. And not to be insensitive to things here, but have you ever seen, there's an old school show here with Doris Day and Rock Hudson, Send Me No Flowers. Did you ever see that one?
No, but I remember those shows with Doris Day and Rock Hudson.
He's hypochondriac, okay? And he thinks he accidentally hears his doctor's conversation talk about someone that's going to die, but he doesn't think he'll tell them because he only has weeks to live. And of course, Rock Hudson thinks it's him.
It's him.
And so he starts, but he doesn't know how to tell his wife. He tells his best buddy. And so it's just super comical the whole time that he's going about this. And so they go out to the country club and he's trying to kind of set her up, thinking like, that guy's a good looking fella. Like maybe you should dance with him and things like, cause he's, and so it's either life insurance or you should, start shopping your spouse out.
There you go.
Yeah, no. So the life insurance factor though, and that's very personal though, right? As far as how much you want to cover, right?
Right.
Because there's no real thumb.
Set amount.
Yeah.
I mean, it's really life insurance. You're not really setting the person up for the rest of their life.
No.
You're getting them through the tough spot.
Yeah.
And that tough spot is the first couple, 3 years after the death. Yeah. So I look at it and go, you should at least have 3 years of your annual income. And if some people say 7, I don't know, that's a personal choice.
Yeah.
But you should have some to get them through the tough spot. Like, your wife, until she finds another guy that's better looking and has more money.
Better looking and has more money. Well, and that was the funny thing when I was talking to my wife about those types of things. And it's interesting because I try and be very logical in that. I was like, hey, well, and the things that people don't think about is like funerals are expensive.
Oh,
like just getting
they're
through
around
that.
$10,000 right now.
I think so. I'll have to have a mortician on the podcast. Jessica will have to arrange that next. I don't know.
That might be a dry conversation. What are you going to talk to him about, embalming?
And I don't think you could ask him, like, what's the craziest situations? Yeah. There's probably some weird situations there.
I'll get you. I'll bet you.
Not to be irreverent to situations there. But that's the reality, though, is you go through those thought processes. And again, some people, it's less comfortable for others. But I was talking to my wife, like, okay, but then we'd have to have a reality check of, like, do we want to live high on the hog if one of us passes, and would life change, right? And so people don't realize that. Like we set up, or like recently did like our trust and all that kind of stuff, and that's very, very similar conversations. I'm saying like, all right, what, like how it's tough for people to think about, but I think it's important. It's important because you cannot. I mean, we all know people that life is fleeting and things can be shifted very, very quickly. And the last thing that you want to do is the people left. To leave them in more pain and suffering because the finances.
You don't want to leave them in a problem.
Yeah,
and you spoke to trusts. We're seeing a lot more trusts, and people need to understand how a trust affects the insurance policy, because an insurance policy is written on you, Chris Hallows. Yeah. Now, if you've got the Chris Hallows Trust, that trust is named as an additional interest on that policy. It's not the policy named insured. That still remains the people. Yep. But what it's going to do is it's going to protect you in the event of let's say, the trust, if you were to die, it's going to protect all your stuff from probate. And that's really what you're after. And you're looking to designate how you want your estate set up so that you don't create fights among the people you've left behind.
Yeah, exactly.
Anyway, it's really a simple process for us. We just add them as an additional interest, and we're done.
Exactly. So that's another good thing for people. So let's see. So umbrella policies, life insurance, and then if you are, setting up trusts and getting those things dialed in to make sure. And that's the other important thing that I think people realize. And at some point, we will have a trust attorney. Mortician, maybe not so much, but trust attorney would be great to talk to on here because it's an important thing. But knowing that there's steps, not just like signing the inked paper and recording that thing is important, that you actually need to get your insurance policies updated and make sure that trust is.
It's just getting all your stuff updated. You got to get I think your deeds got to get updated. Your insurance has got to get updated. I mean, everything in your life has got to get updated to that trust.
Yep.
And a good attorney normally takes care of a lot of that stuff.
Yes. Legal Zoom, not so much, but
try and do it on Zoom.
Or legal Zoom,
legal Zoom.
I
I wouldn't recommend that. Spend the $1,500 or $2,000 and get it done right.
Yep, exactly. And now going back to, and do you guys as insurance companies are there things that people should be doing house maintenance wise to avoid claims and things right now?
Well, yeah, not only claims. I mean, you should take care of your house, but to avoid periodically, insurance carriers do inspections on the home.
Okay,
and if they see neglect or if they see items that need to be corrected, they're going to notify the homeowner that it needs to be corrected. And if it's not corrected, they'll issue a non-renewal on that home. So when it comes up for renewal a year later, they're just going to say, we don't want that business. It doesn't happen a lot, but it does happen.
Is that like a drive-by that they do?
They'll
or will
do
they
a
actually
drive-by.
schedule an inspection?
Either way, they can do a drive-by. They can walk up and knock on the door. They can call and say,
Really?
hey, we're gonna come inspect your house on this date. But they'll do it periodically, and I've had houses non-renewed, and it's funny because people don't read their mail. They'll get They'll get something terrible from the insurance company that says, hey, you've got to fix the siding on the north wall of your house.
Yeah.
And they don't do anything about it.
No.
And then it's a panic at the end.
And you and I talk about some of those things. Like when we go through, billing, and oftentimes, and hey, I'm empathetic. It's happened to me as well, where like the servicer and the insurance company communication is just not great, right. And your mortgage check's out there somewhere, but the insurance company hasn't found it yet. And when you're on top of it, and this is what I'd say is the biggest thing on that to folks, is just to know, hey, when you first get a piece of mail and try and read it timely and take the actions within what is stated, read it thoroughly.
Right.
I'm not trying to talk down to people, but you and I know what we're talking about here.
I know.
Read it thoroughly, take the action when it needs to happen. And then you and I dealt with one of this recently where, within a 15-minute phone call, they say, the check must be lost. We're going to reissue a new one. And then even then, some shenanigans still happen. And I give you a call and you say, it's all good. Everything's happened.
Right.
Don't cash that check. Right? Because that's where I've had people think, here's a refund check.
They think it's free money.
And then when you ask for it again or something, that it never happened, or
when you're talking about, especially like refis.
Yeah.
When you refinance your home, you need to know. Don't trust that the bank or the lender is going to notify the insurance carrier that you've refinanced that home.
Yeah.
And then when it comes up for renewal, if your mortgage billed, you're going to default. You need to call us, and then we'll chase that down and make the changes.
Yep.
The sooner the better, because if you do it within that 30-day period, the billing has already gone out. Your old insurance your old insurance carrier is not going to pay that bill.
Yeah.
And so you're thinking everything's hunky-dory, and you don't have insurance.
Yeah.
And we don't get notified that it's getting canceled in a very timely manner. We get notified after it's canceled.
Yeah.
So I would encourage people, if you refinance or change anything on the loan, let your insurance carrier know.
Yeah. And I told you so doesn't really work in those conversations when you and I are talking to someone that's frantic and my insurance is canceled and freaking out about things. And it's like, well, you did get a notice 60 days ago.
You got 3 or 4 notices.
Yeah. Or multiple notices. Yeah.
But remember, if it's within 60 days, everything's fixable.
Okay.
If they'll get a hold of us. Typically, it's 60 days with the carriers. Past 60 days, they're going to say, no, we're not reinstating that policy. Okay. But if you're within 60 days, now the problem is you get outside 60 days, you're going to get forced insurance put on you by the mortgage company, and that is extremely expensive and doesn't cover any of your interests. It only covers theirs.
If there's a racket in servicing, it's right there.
There it is, and they like that insurance on that side. So
yeah, because forced on anything is not. Yeah, that's not going to be. Like you said, I've seen some people have hey, here's a forced policy, and it's quadruple.
Oh yeah, it's crazy.
Yeah,
and it doesn't cover any liability, or your contents. It only covers their loan.
Yeah,
that's all it's covering.
Yeah,
and that's not good.
No,
and I've seen people go years with forced insurance and never even questioned it.
Just said thanks for the help.
The other thing I would recommend. We'll get calls periodically from people that say, my my mortgage payment went way up, and the mortgage carrier's telling me it's insurance. Typically, your insurance doesn't double. So if you have that happen to you, just call us and we'll explain if there's any difference in your insurance costs.
Or with us as well, and that's the hard part, and maybe to explain that to a lot of people real quick, is when you say things like double, is, let's say, because insurance can increase, and if insurance goes up $100 total for the year, which isn't that big, right? $100 for the year, and then your taxes go up by $500, and then all of a sudden that's a $600 deficit,
right?
And then they say, well, that's money owed now, right, to pay that, right. And then we also need to increase your payment so that that's there in the future. So now that's a $1,200 deficit. So your mortgage payment went up by even though that's $100 overall for the year for insurance. Now your monthly payment just went up by $100 a month.
Oh yeah, no.
And people don't understand all that math.
Yeah, there's a whole bunch of stuff goes into that.
But
so it's now the other thing is if you change insurance carriers, you're typically going to get a refund depending on how far out when you
because it paid what do we call it? It's earned insurance,
right?
Earned premium stage.
It's earned premium.
Yeah.
So any of that unearned premium is going to be repaid to you. So if you got, let's say your insurance for the year is $1,200. And you have 10 months worth of insurance, and then you change insurance carriers. Typically, there's going to be $200 come back to you. Unless you save that $200 on your insurance, you need to pay that back to your escrow account, or you're going to end up with a shortfall in the next year. Does that make sense?
Yeah. Yes. Well, and I would say when we do, and this is very relatively time. And I think we're probably 6 to 12 to 18 months out when we will see a little bit of a refi cycle, nowhere near what we saw. And I don't know if we'll be back in the twos, but it is important for folks to know that they'll get that refund. But typically, if mortgage companies are doing it right, that they're going to fund that escrow account proactively for the proper amounts.
Correct.
But
Correct.
to be watching it,
Which
you always got to be your own advocate and watch
it'll
that.
Fund it, but it's going to create a shortfall in your escrow account because it's been paid twice.
Okay.
Does that make sense?
Let me think here.
Let's say
every time.
Yeah. So if you have a $1,200,
Jessica's laughing right now because she's like, Chris doesn't know something.
Yeah. If you have a $1,200 a year insurance payment, and you change companies at month 6,
refinance at month 6. Yep.
Okay, so you refinance at month 6, and on that $1,200 insurance payment, you're going to get $600 back, unless you saved that entire $600 on your new policy. Whatever that difference is needs to go back to your escrow account. So let's say your new policy is $800. You're going to be $200 short on your escrow account going into the next year. So you need to take $200 of that money and pay it back into your escrow account.
Now, I
lost you, didn't I?
I don't agree. So when we refinance, the policy actually doesn't cancel. And they don't get refunded their policy, but they do get refunded that escrow account from the servicer. That's what we're talking about, right? So the insurance company's not paying them back.
No, the insurance company pays them back. The insurance company pays the insured. They don't pay any mortgage company.
Yeah, but on a refinance, they're not canceling the policy. It just rolls right forward.
It's on a change, not on a refi.
Oh, okay.
On a change.
Okay.
On a refi,
it
just goes straight on through.
Yes.
And there's no change in the policy. So
big asterisk. So not on a refinance, but on a change of carrier.
Now, where we end up in some problems every once in a while is that, let's say you refinance at month 6. The new mortgage company then goes in and pays the entire $1,200 in full. So now you're double funded on your insurance. The insurance carrier then is going to refund that $1,200 to the insured, but your mortgage company, I don't know how it's going to work with your old mortgage company, your new mortgage company, because that premium's already been paid.
Yeah. No, and I think that's where, yes. So I think the key there is that a lot of mortgage companies need to be communicative and knowing and doing the math on this stuff, knowing what's happening. Are we changing insurance companies or not? Because if they're changing, then they're refinancing and not changing carriers. it rolls forward really smoothly.
No, I would say Wallach and Volk, and it's not because you're sitting here, does a great job of communicating.
Yeah.
The banks, not so much.
Yeah.
I mean, if you're dealing with...
It's more like a telemarketer type, large institutionalized.
They don't think it's their job to let anybody know that there's been a change.
Yep.
Where Wallach and Volk, in I think every instance, lets us know that there's been a change in this mortgage company. We need a new evidence of insurance.
Yes.
Listing you guys as the new mortgage carrier. Not everybody does that.
Well, and that reminds me when I was first getting in the business, and then with the Dodd-Frank bill, all the licensing requirements came in. So I'm sitting in a licensing class and down in Scottsdale, and with everyone under the sun, like experienced lenders, big bank lenders, broker, like every just like 30 adults in a room, right? And this one girl kept raising her hand, and she'd been in lending forever, and she worked for one of a big box bank, and was like, no, that's wrong. She's telling the teacher, like, that's wrong. We can do, you can't do that type of loan. And they're like, and after they went through several iterations, they had to tell her, like, I'm sorry, like,
be quiet.
You've been working for the dark side, like, and I shouldn't say that about all big box banks, but it's just that, like you said, is here I'm thinking it's gospel that banks communicate, but
right.
They don't.
No,
right?
And it's interesting. Not all independent mortgage companies like yourself do as good a job as Wallach and Volk does.
Yeah.
There are some that are very, very difficult to work with, and everything's last minute.
Yeah.
I would say with your team, I have plenty of notice. I don't feel any kind of stress that this has got to happen today. They communicate, and from our side, it makes our job a whole lot easier.
Well, and that's a non-paid endorsement from Bill Tullis there. But I agree with you. I think that's something.
I don't get paid.
Oh man, sorry. There was some fine print there. You must have. But I think that is an important thing for people to understand that. In general, when it comes to anything, you have to be your own advocate, right? Like we will go up just as anecdotal that luckily most of the time we've been up at the hospitals when we're having babies, right? And then it's just been one of those things where it's like, paying attention to like, all right, the nurse changeover happened, this nurse said that and this, and then every now and then they're like, oh, yeah, you're right. We need to do this medication or that thing. And it's just like I've learned, like as much as I trust those people and they're licensed and they're professionals, you got to always watch yourself. And I think that's critical in the sense of like you want to be watching people's back on insurance. We want to be watching people's back when we structure mortgage and everything. But it is important for when people to be doing things where there's a lot of money on the line and there's a lot of risk with insurance that they need to understand these things themselves.
They need to educate themselves.
Yes.
Read the policy.
Yes.
I mean, you get a packet from every insurance carrier, and I don't mind. In fact, I like it when people call up as soon as they get their packet and go, can I ask you a few questions?
Yeah.
Absolutely. Let's go through the whole thing. Take some time, but, at least when they're done, they understand, and they may want to make some modifications to it that I didn't understand they had this or that or whatever it is. And the people that go through and read cause me very little issues in the event of a claim because they know what they've got. Most people don't, but I wish they did.
Yeah.
Read your policy. And primarily, most policies are going to be they're going to be all inclusive except for the exclusions. Read the exclusions.
Yep.
That's the most important part of your policies is what's excluded. And if people read those, I'm happy.
Well, and it's so important because I think what that is something that we try and live by in our business is things need to be day appropriate, right? And it's the day that you get the policy is then the appropriate time to know the exclusions, not 3 years later when now you're finding out that exclusion doesn't cover what's going on.
When you have a claim.
That's all of a sudden not the appropriate time to be finding that out.
That's exactly right. And it may be like an exclusion. A lot of exclusions have endorsements that you can add to exclude the exclusion.
Okay.
If that makes sense.
Yeah.
So if something's important to somebody that they want to have endorsed, there's a good chance we can endorse it to include it on the policy. But on a standard normal homeowner policy, it's an excluded item.
Yeah. And that's the hard part is everyone's so individualized that they don't realize that there is not a one size fits all situation here. No. And that's something that's hugely critical to, like I had a tenant once connect with me about, and he was smart enough to know that he's like, hey, by the way, I have like massive fish tanks that I'm going to bring into your town. I love, like, I have exotic fish and things, and I'm going to bring these massive fish tanks into your house. I was like, great, thanks for letting me know. Let me check. Like, you carry a renter's policy on that and things, and it's that's like
exactly right.
You know, it's like that's unique for you to be knowing that you're moving across the country with thousands of pounds of water to put in these.
You know, which brings up another issue that we haven't talked about. If you're a landlord, if you have rental properties, you should require all of your tenants to carry renter's insurance because it's going to cover their liability for something that they may do to your property. Or if somebody were to get hurt on your property, it's going to start the liability process. Theirs would be primary, yours would come in secondary.
Yeah. No. It's, again, those little things that you don't think about, or it's that little friction that sometimes it's not fun to have to wait and require or ask for it. It's just a matter of like, hey, give me the rents.
And renters policies are cheap. They're $300 a year, $400 a year.
Yeah.
They're cheap, and everybody that's renting really should have them. Not only to cover their liability, but to cover their contents.
Yep, exactly.
The fish tanks.
Exactly. Yep. And it worked out. They didn't leak.
Which I'm going to have to check if the fish would be covered if that. I'm not sure.
Interesting. Yeah.
I'm not sure.
That serial number, those things.
See, I got a new thing to look up now.
There you go. Well, Bill, we've been the time flies in this room to where I guess do you have any other major tricks, tips, or advice for people wanting to just make sure that they're protected heading into 2023?
I would say stay in touch with your insurance agent. And if you need to have an insurance agent that you trust and that you can talk to, stay in touch with them, review your policy, make sure you understand what's in your policy, and make sure you're getting the best value for your hard-earned dollar.
Absolutely. Okay. Well, I appreciate it. Well, and for those folks listening, yep. Oh, no, we're good, Jessica.
More music.
We'll tease the outro. Give Bill a call. Give him a second look.
Do we dance now?